Okay, so picture this like a financial Mount Olympus, right? It's like this exclusive peak, and only U.S. companies that hit $1 trillion valuation get to be there. Right now, it's a pretty impressive list. You've got Apple in there, Microsoft, NVIDIA, Amazon, Alphabet, Meta Platforms, even good old Berkshire Hathaway.
It's the titans of industry.
It really is, and it makes you think about it. U.S. Steel was the first to break the $1 billion mark way back in 1901.
Wow, that's going back.
It is. And then fast forward all the way to 2018, Apple comes along and boom, 1,000 times bigger. That's the first $1 trillion company.
It really shows you how much faster things are changing now, doesn't it? Economics, technology, everything's accelerating.
Totally. And that $1 trillion mark, that's not just a big number. It means a company is like reshaping entire industries.
And capturing enormous value along the way, of course.
Absolutely. And that brings us to the company we're focusing on today.
Oracle.
Intriguing choice. Is it possible that they could be the next to reach that $1 trillion summit? Because as of right now, mid-March 2025, they're sitting at about a $403 billion market cap.
Okay, so we're talking about a potential jump of about 148% to get there.
We are, again, like that isn't just, random chance. It suggests something big is happening or they've got some serious advantage.
It makes you wonder what could possibly unlock that kind of growth. What's the key?
That's exactly what we're going to unpack in this deep dive. You ready to go?
Let's dive in.
We're going to look at why Oracle is generating all this buzz as a potential $1 trillion company.
I'm listening.
And our focus is going to be on the engine room, the beating heart of the artificial intelligence revolution, AI infrastructure.
Okay.
So think about those massive data centers, the ones that give these incredible AI models their raw power.
Right, the fuel for the fire.
Exactly. We're going to drill down into how Oracle fits into this sector and the financial signs that are pointing towards this really optimistic outlook.
Sounds like a plan.
Okay, so first things first, let's break down this whole AI data center boom. What's going on there?
Okay, so at the core of AI development, there are two main phases.
Okay.
You start with training. This is where the AI models are learning from tons and tons of data. They're finding patterns, making connections.
Right. So it needs a lot of processing power.
It requires an immense amount. Think about training a self-driving car. It has to analyze hours and hours of footage from the roads.
Right. It's like showing a puppy 1 million pictures of cats, but not just pictures, like videos of them doing all kinds of things. So it truly understands what a cat is.
Precisely. And then you have inference.
Okay.
That's when the AI model uses what it's learned. It interacts with users, interprets data, and gives responses.
So like a chatbot answering questions online, that would be inference.
That's a great example. Now, both training and inference need a ton of computing power, way more than most organizations can handle on their own.
So instead of building their own supercomputers, companies and developers are turning to providers like Oracle to essentially rent that processing power in these specialized data centers.
Exactly. It's a much more efficient and scalable solution.
Right. And what makes Oracle's AI data centers different or better than others?
Well, what's interesting is that Oracle seems to have a really deliberate strategy in building what you could say are some of the best AI infrastructure facilities worldwide.
So they're not just throwing servers in a room.
No, definitely not. They're equipping these centers with the most advanced GPUs available, those specialized processors from NVIDIA and AMD.
Those are the ones that are essential for speeding up AI workloads, right?
Yes, exactly.
I remember reading something about a big investment they're making in this kind of hardware.
Oh, absolutely. It's not just minor upgrades.
No.
Oracle is currently setting up a massive cluster of 64,000 NVIDIA Blackwell GB200 GPUs.
Okay.
And just to give you an idea, the GB200 is considered the top AI chip out there right now, and this will be one of the biggest deployments of this tech anywhere.
64,000 of them? That's mind-boggling.
It's a huge statement about how seriously they're taking the future of AI.
More powerful chips means faster AI development, obviously.
Yeah.
But there's another advantage Oracle has, right? Something to do with how the data moves around their centers.
Yes, or you're thinking of their networking technology.
Okay.
It's called Random Direct Memory Access, or RDMA.
Okay.
Most data centers use Ethernet networks, but RDMA is different. Think of it like a high-speed lane just for AI data within Oracle's system.
So the data can move faster.
Much faster compared to regular traffic on an Ethernet network.
So if Ethernet's like a highway, RDMA is like a hyperloop built for AI.
I like that analogy, and here's why this is so important. Lots of developers pay for computing resources based on how long they use them.
So the faster the data moves, the less they have to pay.
Precisely. RDMA can lead to big cost savings because their AI models train faster and tasks are completed quicker. It's a real tangible benefit.
Speed and cost savings, that's a winning combination. Now, I know Oracle announced that they opened their 101st data center cloud region, which seems like a ton. But I keep hearing that demand is still much higher than they can supply.
That's right. Even with over 100 cloud regions as of the end of February 2025, the demand for Oracle's AI infrastructure is enormous.
Why is that?
Well, Larry Ellison himself said that GPU usage just for AI training has skyrocketed by 244% in the last year alone.
Wow.
And it's not just about training those models, it's also about running them, doing the inference work we talked about. And that demand is huge and growing rapidly.
It really shows you how fast AI is becoming part of our everyday lives.
Yes, and if you think about the bigger picture, Jensen Huang, the CEO of NVIDIA, he's predicted that the next generation of AI will need 100 times more computing power than today's models.
100 times more. Are you serious?
That's what he's saying. And those next-gen models are the ones that will be capable of much more complex thinking. So the demand we're seeing now is just the beginning.
So suddenly, Oracle's plan to scale up their data centers makes a lot of sense.
Absolutely. They're aiming to go from just over 100 cloud regions to somewhere between 1,000 and 2,000.
That's a tenfold or even 20-fold increase. That's huge.
It's a huge statement about how much they believe in the growth of the AI market.
Okay, so the demand is there. Oracle seems to have a real edge with its technology, and their expansion plans are massive.
Yes.
But are we seeing this potential translate into actual financial gains right now? What are the numbers saying?
Well, the financial results definitely look promising. In their fiscal Q3 2025, Oracle reported total revenue of $14.1 billion.
Okay.
And the part we're interested in is their Oracle Cloud Infrastructure, or OCI segment, which is where their AI data center business lives. That brought in $2.7 billion.
So OCI isn't the biggest piece of their revenue pie right now, but I've heard it's growing incredibly fast.
That's exactly right. Oracle's overall revenue went up by a healthy 6% year over year, but OCI revenue shot up by a massive 49%.
So it's their fastest growing area by far.
By a long shot, and they've even said that this growth could be even higher if they had more data centers available to meet the demand.
It sounds like they need to build more to sell more.
You got it. And Safra Catz, the CEO, is predicting that OCI revenue growth will be over 50% for the full fiscal year 2025, which ends in May.
Wow.
And even more importantly, they're saying that this growth rate will actually speed up in fiscal year 2026.
So it's not just a blip on the radar, it's a trend they're expecting to continue.
Exactly. And to really show how strong the future demand is, look at their remaining performance obligations, or RPOs.
Okay.
These jumped by a whopping 63% in Q3 to a record $130 billion.
And those represent future revenue, right?
Yes. Think of them as a backlog of guaranteed business that will turn into revenue over time.
So $130 billion of business already in the pipeline.
Precisely. And Ellison himself said that a big driver of this surge in RPOs is the high demand for their AI training and inference capacity.
So there's a lot of momentum building, especially in their AI infrastructure business.
Absolutely. It's a clear sign that things are moving in the right direction.
Okay, so we've got massive demand, impressive growth in their key AI area, and a ton of future business already lined up.
Yes.
But the big question is, can they get to that trillion-dollar valuation? What's the outlook for their earnings and stock price?
Well, let's look at the numbers. Over the last 4 quarters, Oracle has earned $4.26 per share, or EPS.
Correct.
And based on their current stock price, that gives them a price-to-earnings ratio, or PE ratio, of 33.8.
Okay.
And if you compare that to other big players in AI cloud computing like Microsoft and Amazon, their PE ratios are similar.
So the market is valuing Oracle in the same ballpark as its peers.
It seems that way.
So what are analysts expecting in terms of earnings going forward?
The consensus estimate for fiscal year 2026, which starts in June 2025, is an EPS of $6.78.
Okay.
Now, if they hit that number, their forward PE ratio would drop to 21.1.
That's a big change. What would that mean for their stock price?
Well, if their stock price stayed the same and they reached that EPS of 6.78, the price would have to go up by about 59% just to keep the same PE ratio.
So they could gain a lot of value even without any change in how the market values them.
Exactly. That would put their market cap at about $640 billion.
That's a big jump.
It is. And from there to hit $1 trillion within 5 years, they would need to grow their EPS by an average of 9.3% per year.
That doesn't seem unreasonable considering they're projected to grow EPS by 13% in 2026. And they're expecting revenue growth to accelerate too, especially with OCI.
It does seem achievable. And don't forget, they're also focusing a lot on automating their data centers.
Hey.
As their OCI business keeps growing, this automation should bring down their costs, which means higher profit margins and even better EPS.
It's a win-win. More revenue coming in and that revenue becoming more profitable.
Exactly. And remember their plan to potentially increase their data centers tenfold. Analysts are saying this could lead to explosive earnings growth in the long term.
Wow, that's exciting. Okay, so let's sum this all up for our listeners. What are the key things to take away from our deep dive into Oracle's potential to hit that trillion-dollar mark?
The biggest factor is the huge and growing demand for AI infrastructure. And Oracle is in a great position to capitalize on that with its advanced data centers and unique networking technology.
And we can't forget the impressive growth they're seeing in their Oracle Cloud Infrastructure segment, which is outpacing the rest of the company by a mile.
And lastly, the financial projections from both analysts and Oracle itself point to a realistic path for them to reach $1 trillion market cap in the next few years, driven by strong and consistent earnings growth.
So it's clear that Oracle is right in the middle of this AI revolution, and it's going to be really interesting to see what happens next.
I agree, it's a company to watch.
It is, and here's a final thought for you all to ponder. With AI evolving so rapidly and the need for powerful cloud infrastructure growing all the time, what other companies or even brand new technologies might be on a similar path of exponential growth? And beyond just market cap, what other factors should we be thinking about when we're looking at these kinds of groundbreaking opportunities in the market?
Those are great questions.
Until next time, happy investing, everybody.
Take care.